Hi guys. Very good morning, everyone. Yeah, very good morning, everyone. Hope you guys are in the session, and soon we'll start the live. We'll go with the news. We'll go with the post market, yesterday's post market news, and pre market news, which has already happened overnight. Like whatever the news has came, whatever the updates are there. So we'll talk about that. Just wait for 2 minutes. We'll start with the. We'll talk about the post market. What happened yesterday after the market. Benchmark. What happened at the last street yesterday? So it is benchmark indices stumbled sharply on Tuesday. The Sensex plunged 893 points with 1.16%, which is close to 76,200.68. While Nifty 50 declined, Nifty 50 which declined 278 points to settle at 23,824.10 and sliding below the psychological 23,850 mark. So this aligns with your whole analysis, I guess so. And also Nifty closed at 23,794, down at 308 points total. Hope you guys can see the chart. I have put the Nifty 50 chart and sharing my screen. Can you just see the screen? If someone's can people see the screen? Can you just put that in the comments so that I can get an idea? Because we're having some issues here. So let's start. It's Wednesday, 2024 to 2026, June 24. And let me tell you, today is not an ordinary day for the markets. There are at least five major things happening simultaneously that every trader and investor need to know before they put a single rupee in the market today. So whether you're watching from Bangalore, Mumbai, Delhi, Chennai, wherever you are, please share this live session with your friends, family right now, so that they'll get an idea and they'll watch, they'll learn. So let's get started. And as I mentioned, the very first thing I always check in the morning before I look at anything else is gift nifty, because gift nifty tells me what global money is thinking about India before our market even opens. So as of this morning, gift nifty is trading at around 23,873, up about 0.26 from yesterday's close of 23,810. So, what does this tell us? Like, it tells that market will try a small gap up open today, but and this is very important. Don't get excited too fast. 60-70 point gap up in Gift Nifty does not mean the market is going to fly today. It just means we are not getting a gap down. There is a difference. Okay, so we are in recovery attempt mode, not rally mode. Keep that in the mind. Meanwhile, US futures. So this morning are like showing Dow futures down 216 points at 51,903. So while Nasdaq futures are sharply lower, down of 791 points or 2.58%, and the VIX, the fear index, has jumped to 19.74, up to 14%. Gold is at $4,138. Yeah, hold on. Nasdaq futures down 2.55%, like VIX up to 14%. And why it is like it's there? Like what do you think happened? What do you think happened overnight? So this is exactly what we are going to break down for you right now. So this is the pre-market news dump, and everyone this happened while you were like sleeping. What exactly happened whole night when you were sleeping after the market? We'll go through this. So the five things which happened overnight are one is Micron results are tonight. So the first one, number one, and this is the biggest market event of the entire week, like globally. Micron Technology reports its quarterly earning tonight after US markets close at 4:30 p.m. US Eastern Time, which is approximately 2 a.m. in Indian time. So now, why should an Indian investor care about Micron? So I'll explain that in a detail in a later segment. So, but the short version is whatever Micron says tonight will decide whether Indian IT stocks like Infosys, TCN, HCS, HCL, TCS, and they go up or go down tomorrow. Micron guided fiscal Q3 to record for revenue of $33.5 billion, gross margin of approximately 81%. Analysts are like projecting revenue of $34.66 billion and EPS of the $19.95 for this particular quarter. And street expectation is revenue of $34.66 billion. That's more than 2.8 lakh crore rupees. And from one company in one company quarter. This shows you the scale of AI revolution happening globally. If Micron beats IT stocks, could become bounce tomorrow. If Micron disappoints or gives weak guidance, we could see another brutal day for IT. So you should watch this tonight. Yeah, as I mentioned, the second news is about Nasdaq. US futures crashing on Nasdaq. So Nasdaq futures are down by 791 points, fall of nearly 2.58% in pre-market. So the VIX fear index has jumped to 19.74, up over 14% from yesterday. So this is significant. The Nasdaq is falling further even in the pre-market today, and this is directly because of the ongoing semiconductor sell-off that started in South Korea, moved to US, then will likely hit Indian IT stocks today, like again at open. The chip sell-off is not over it. The tech is under serious pressure globally. Yeah, the major third news will be the Tata Electronics cyber attack. So it is the major Indian news which is going on. This is the biggest corporate India story of the whole week, and it happened while most people were not paying attention. So Tata Electronics confirmed a cybersecurity incident. Uh, a ransomware group called World Leaks posted over 2 lakh files totaling 630 gigabytes on the dark web. So purportedly containing component design and specification papers of both Apple and Tesla, two of Tata Electronics' biggest customers, Apple and Tesla. So among the leaked files was like a 52-page document bearing Apple's proprietary marketing, detailing quality inspection standards of iPhone circuit board components. There were also filed related to Tesla's project England. So the internal code name for the revamped Model 3 sedan. Tata Electronics currently accounts for roughly a third of Apple's iPhone production in whole India. Think about what this means. Like Tata Electronics makes one third of all iPhones assembled in India. So from the Hosur plant in Tamil Nadu, yeah, all this happens. So Apple's cybersecurity team has now been sent to India to investigate. A ransom demand was made to Tata. This is a massive blow to India's reputation as a safe manufacturing destination for global companies. It will put a short-term pressure on Tata Group stocks, which are like TCS, Tata Motors, Tata ELXCI, and yeah, for today. And the fourth main important news is about the crude. Crude falls to 3 months low, like good for India, of course. Crude oil fell to around $73.4 per barrel on Tuesday, and its lowest level in nearly 3 months, as Washington granted Iran a 60-day license to sell oil on international markets, raising expectations of faster increase in global supply. So, traffic through the Strait of Hormuz has picked up, with Iran shipping more than 30 million barrels over the past 1 week. So this is genuinely a great news for India. We import over 80% of our crude oil like needs. Every $10 drop in oil saves India's roughly 80,000 to 1 lakh crore per year in the import bill. So lower oil means lower inflation, lower a strong rupee, and more money in the pockets of Indian consumers and companies. This is a major macro positive. Sectors that directly benefit like FMCG, aviations like Indigo, paints like Asian Paints and Burgers, tires like MRF, seed. Yeah. So the last fifth major news which happened was Bajaj Auto buyback record. Date is today. So Bajaj Auto has fixed June 24, 2026 today as the record date for its 5,632.80 crore share buyback, the company's largest ever buyback at 12,000 per share, offering shareholders a premium for nearly 19.5% over the prevailing market price. So this is a tender offer buyback with the tender period opening from July 1 to July 7, 2026, coming July. So if you own Bajaj Auto shares in your Demat account today, so you are now eligible to participate in the buyback. So the buyback price is 12,000 per share, as I mentioned. And if the stock is trading around 10,000 or 10,200 in the market, that means you potentially get 12,000 from the company, 19% instant gain on your holding. But remember, this is a tender offer, meaning not all shares tender will be accepted. There will be an entitlement ratio. Still, this is a very attractive shareholder return ever from Bajaj Auto. Yeah, these are the that's your like five pre-market headlines that let me just like break down yesterday's market in full detail, and we'll just go sector wise, and we'll continue the session. So, what do you think happened yesterday after the market closed? So, yesterday, June 23, the Lal Street had a absolutely brutal day, and let me paint you the whole full price. Yeah. So yeah, the last state I was talking about, the last state had an absolutely brutal day yesterday. So let me paint you the whole picture for now. Yeah, the benchmark indices stumbled sharply. The Sensex plunged 893 points, or 1.16% to close at 76,200.68, while Nifty 50 declines 278 points, settle at 23,824, slipping below the key psychological 23,850 mark. Now, this is important context. The Nifty had actually rallied about 4.1% over the previous seven sessions. So, yesterday was partially a profit booking day, but it was much more than that. Let me give you the four actual reasons for it, like why it fell. The one major reason is profit booking after strong seven session rally. Simple. When market rally 4% in 7 days, smart money always books partial profits. Yesterday was that day. And the second news, India PMI data shocked the market. So India's private sector activity like moderated to a 3 month low in June, and services activity expanded at its like slowest pace in 17 months. So manufacturing growth also slowed to a 3 month low. So this is a red flag for the whole domestic economy. And when services, like which is the backbone of the India's GDP, slow down, so it means consumption is slowing. It means corporate revenue could soften. Markets don't like that, and that's the second major reason for falling of Nifty yesterday. And the third is IT sector led the fall. So Infosys and TCS were top losers yesterday, and the IT sector sold off like hard because of two things. One is US Fed rate hike fears, like high rate means high like valuations, and second one is Accenture's weak earning, which is published recently, which spooked the entire global IT sector. So when Accenture, which is like the benchmark for whole global IT services, says demand in soft, every Indian IT companies get punished. Infosys, TCS, Wipro, HCL, like all sold off. I think you guys can see the chart properly. Since one of our viewer is asking the live market chart can show in display. Yeah, I just put the chart here, and I am sharing the screen. I hope you guys can see that. It's already on. If you want me to put your favorite stock also, I can put. And yeah, go for the fourth reason, which impacted Nifty yesterday. So the fourth one will be South Korea circuit breaker, which I already mentioned, global contamination. So South Korea's Kospi triggered a circuit breaker. It crashed more than 9% intraday, and South Korea Hynix fell over 10%. Samsung Electronics fell over like 7.5%. This ripped across all of Asia. When the South Korean market literally halts trading because it's falling too fast, that is a shock to global sentiment. Money flows out of all emerging market when it happens. Like India was collateral like damage for this, you know. And we'll come to the global market. What happened in the global market overnight after the our Indian market closed? So just let's look at the what happened globally overnight, because global markets are the reason Indian markets move that way. They do like every morning. So the S&P 500 fell 1.44% to 7,365. Hope you guys can see me clearly now. So as I mentioned, the Dow Jones, which has more defensive stocks, was down only 45 points, which is nearly 0.09% at 51,666. So you notice the diversions here. So Dow only moved, but Nasdaq crashed at 2.2%. This tells you that it's not a broad economic fear. It's specifically a technology sell-off. So defense stocks like Walmart, Procter, Gamble, and Johnson. So were like actually UP. So IBM jumped 5% after JP Morgan's update. This is a classic rotation, money moving from growth tech to value defensive. The same rotation will play out in India today. Pharma up, IT down. We already discussed about this yesterday also, about the movements in the pharma and IT. South Korea stock fell with the Kospi sliding sharply, with the heavyweight chipmakers leading losses. So Hynix and Samsung Electronics each fell more than like 4%, underscoring the market's dependence on the AI trade. So this is the global chip sell-off, and the connection to India. What do you think? This is connected to India and Indian market. So the Infosys, TCS, HCL, they are all do massive IT services business with global technology companies, right? So when the chip ecosystem suffers, IT services suffers downstream. And European market, it has also ended broadly lower. DX, FTSE, CSE all red. The entire global risk of mood was consistent. So we'll take the crude oil, the silver lining. So it has approximately at 73 to $74 per barrel. 3 month low. Iran has been granted a 60-day license to sell oil. State of Hormuz traffic is recovering. So for India, this is the one thing to feel genuinely good about. The oil below $75 is a gift for Indian economy. It's like the government getting a massive tax cut without even trying. And what about FII, DI, Indian specific? So from your whatever the reports we have created, and yeah, we have also by end of the market yesterday, after the all post market, we have given a report. So yeah, FII sold 635.90 crores on June 22nd, and they are about 1035.70 crores. So foreign investors are still selling India, but domestic institutions like your mutual fund, LIC, pension, like all buying every dip. This is what's preventing a bigger crash. So Indian retail is investors like through SIPs are actually the backstop for this market right now. So let's talk about what we can expect from today's session, today's market. So yeah, GIF Nifty at 23,879 implies when Nifty opens with a positive gap. Like we have mentioned, we are currently seeing. But yeah, here's the thing: a 60 points gap up open does not mean the market will hold those gains. When given the US Nasdaq futures down 2.5% in pre-market right now, and there is a, real possibility that the market opens, like which has already opened with the positive. You can check, and the drifts lower as the IT sector face fresh selling. This is kind of buy the news and sell the reality scenario unless something changes actually. Yeah, we already talk about the micron earnings. Like I want to spend more time on this because this is what will decide how the uh, market will perform today. Micron Technology, the world's third largest money memory chip maker, reports its quarterly earning tonight after two US market closes. Revenue will be expected around $34.66 billion. EPS expected of 19.95 per share dollars per share. For context, just 1 year ago, Micron was earning only 1.56 EPL per quarter. So they went from 1.56 to 19.95 EPS in 12 months. So this is the power of AI memory super cycle. So Micron guided fiscal Q3 to record revenue of $33.5 billion, gross margin of approximately 81%. So operating expenses of about $1.4 billion and non-GAAP diluted EPS of 19.15 dollar per share. So for full fiscal 2026, analyst project EPS of 57.71 up to 651% from $7.68 in fiscal 2025. So with this further growth to $97.77 expected in fiscal 2027 upcoming. So 651%, 651% earning growth in 1 year. This is not a typo. This is the AI memory revolution in numbers which has happened. And why you think it matters to Indian IT? So here's the connection that most people miss. Micron's guidance of AI memory demand is a proxy for total global technology spending. So if Micron says AI demand is strong, they are sold out through 2026. Customers are buying like crazy. So that means global tech budgets are healthy. That means companies like Microsoft, Google, Amazon, they are spending on IT. And when they spend on IT, they give projects to Infosys, TCS, Wipro, HCL. So Micron's results are like equal to IT, Indian IT field. And there are two scenarios. Micron beats and raises guidance. Like US Nasdaq rallies tomorrow like morning. Indian IT stocks bounce 2% to 4% on Thursday, such as TCS, Infosys, HCL, Tech Mahindra may all move up. And the second scenario will be Micron misses for a given week, like Q4 guidance. US Nasdaq falls further, so it leads to Indian IT faces more pressure on Thursday. Could be another brutal day again. So the option market is pricing at a 17% swing in Micron stock like post earnings. That is enormous volatility. Set your alarm at 2 a.m. So or check first thing Thursday morning. So yeah, Micron's Indian connection. Micron has actually invested in India. They have a semiconductor facility in Gujarat that opened this year, 2026. So Micron's success is also India's semiconductor story. When Micron does well, it validates India's as a chip destination. So yeah, we'll go to the pharma. We already mentioned pharma. Yeah, let me start with the good news because pharma is your anchor in this whole storm. Nifty Pharma was the only sector that was green yesterday, so up of 1.03% and a Cipla of 2.51%. So Torrent Pharma strong, Zydus Life strong, and three reasons. Why you think three reasons are these three reasons are like why pharma is outperforming, good performing. So lower crude, lower raw material, and energy costs for drug makers. So rupee weakness boosts export revenue in USD terms, and defensive buying, which when market fall, money moves to pharma. See, I have mentioned the news about Cipla. I have mentioned the news about the Cipla, and you can see the chart. It has given signal. It's our tool. We are talking about our tool, and also we already gave a call for our clients also. So yeah, I was talking about the Cipla, which was outperforming, and we already the software predicted, and it gave a sell signal yesterday, and it went up, went down. 1.14% of minus 16.55 points. So you can see. So yeah, we'll talk about the IT. I think IT you should avoid for now. This is the danger zone right now. I'm not saying like IT stocks are dead forever. They will come back, but timing is everything, right? So for now, you should kind of avoid IT for now. And Infosys at the 5 year low, and TCS nearly a 6 year low. Accenture's weak outlook, US Fed rate hike fears, South Korea's chip crash. All of this is combining to pressure Indian IT. So my advice is do not buy IT stocks for today and do not average down. Wait for the Micron results tonight, and which happens at 2 a.m. Where if Micron beats by IT on Thursday morning, if check the market prior taking any decisions. If Micron misses or stay away another few days, I guess so. So we'll talk about the metals. Actually, we should you should go, wait for the global cues. Vedanta, Nalco, Tata Steel, Jindal Steel, all under pressure. Like global commodity markets are actually weak. China demand is soft. So, but here's the actually thing about metals. The long-term India story is intact. Infrastructure spending, PLI schemes, make in India, like all demand metals. Goldman Sachs says India is the next big steel demand driver. So Nomura has buy on Tata Steel, JSW Steel, Jindal Steel. This is a sector you accumulate on big falls, not panic sell. And when it comes to banking, yeah, RBI has removed the interest rate cap on NRI like FCNR deposits until September 2026. So banks like HDFC, ICICI, SBI, Axis can now offer higher rates to attract NRI money. So HDFC Bank hiked FCNR like deposits rates to 6% for next 3.5 years, and ICICI Bank is offering 6.50% on NRI fixed deposit. So AU Small Finance Bank hiked its peak USD deposit ratio to 7.10%. This is actually a smart RBI move. So India needs foreign currency like inflows to support the rupee. By letting banks offer better rates to NRIs, money comes in, the rupee stabilizes and inflation cools. So Bank Nifty may see selective stock movement in this news. SBI, ICICI, HDFC, bank in focus now. So yeah, the mega story about the Reliance. If there is one stock that every Indian investor must watch closely over the next 6 to 12 months, it is Reliance Industries, and here's why. At the June 19 AGM, Mukesh Ambani confirmed that Geo platform filed its DRHP with SEBI, the first step towards what could be India's biggest ever IPO. Geo is valued at $111 to 127 billion. So according to Nomura, the stock rose 2.4% on AGM day. Additional announcements which happened: Jamnagar Sovereign AI Hub targeting 120 MW of AI compute capacity. So new energy revenue starting from FY 27. And Reliance Consumer Products targeting 1 lakh crore revenue by FY30. So this is company building the infrastructure of India's future. So telecom, AI, clean energy, retail. CLSA has a target of 1,800 rupees on RIL. So that's 34% upside from current level. So stay long RIL. See, yeah, guys. See, we have a news update. ABB is going downtrend. You can see, and our software also already gave a sell signal, which went by 1.33%, 94 points. You can see our software already gave a sell, and and you should keep an eye on ABB for today. It's going, it's in downtrend now. So watch the market. Yeah, the next one is Bajaj Auto buyback, which I already mentioned. So if you hold Bajaj Auto, you are now eligible. The 19% premium to market price is are actually attractive. But remember, not all shares trended with we expect accepted, which I already mentioned. So the entire like entitlement ratio will be announced. So retail shareholders get preferential treatment since promoters are not participating. So check with your broker for the extra process. So yeah, Adani Mudra Airport launched its first scheduled commercial flights Mumbai to Goa with Star Air. So JSW Infrastructure doing a 7,500 crore QIP fundraise. Bharat Forge secured a 425 crore defense contract for the Indian Navy. So India's infrastructure story is intact. Airports, ports, defense, all growing. So there is a long-term compounders buy and hold. Media and entertainment, G entertainment story. Which now this is a fun one actually, and it directly connects sport, entertainment, and stock markets. So G Entertainment secured India's broadcast for FIFA World Cup 2026, which is happening right now, and 2030 in a last-minute deal valued at approximately $14 million. The deal runs through 2034, covering 39 FIFA events. G launched its new sports network, United Sports, to carry the broadcasts. So G shares jumped approximately 7% on the announcement. But here's the business challenge: 69 out of 104 World Cup matches kick off in overnight hours for Indian viewers. So most Indians will be asleep. So advertisers won't pay premium rates for 2 a.m. matches, right? So the content cost is $40 million, but the advertising revenue could be disappointing. So watch G carefully. The initial 7% pop may not sustain if viewership disappoints. The World Cup began just 10 days after the IPL 2026 final, and major prime time advertisers has already spent the majority on their annual sports budgets on IPL, which already happened prior the World Cup. So Geostar, Reliance joint venture with Disney, so holds IPL, EPL, and most premium sports right now. So G got FIFA in last moment save. The battle for India's sports audience is intensifying. So and that's good for consumers, but tough on media company margins. So yeah, the whatever the corporate action IPO news happened, and you must be aware of these news. One is today Bajaj Auto buyback record of 12,000 per share, which is 5,633 crore, as I mentioned, and Build Pro, Shankara Build Pro, were divided 5 rupees per share. And you should watch the IPO pipeline. Indian primary markets remain active. So several SME IPOs coming up this week. Check the NSE, BSE announcements for that. And let me just wrap up with your whole roadmap for the today. Yeah, well, according to the sector, I'll tell you the news. So the pharma buy on dips only say for having right now. So IT, you should, I guess, wait till the micron results are out tonight. Maybe like you'll get a clarity idea tomorrow. And metals, I think you should avoid today. Global commodities weakness because of this. And banking, selective, but because of the reason, like I have mentioned, SBI, CSN, and RBI, NRI move, and Bajaj Auto, which is like buyback action is today. And you should monitor the three things. Micron earnings tonight, 2 a.m. Indian time. This is the trigger for IT sector. And the Nifty pivot at 23,915. The market's direction for the week is decided by whether we hold above or fall below this level today. And yeah, let me leave you with one thought. The market is down, yeah, but IT is under pressure, yes. But global uncertainty is there, of course, yes. But India's macro story is better than it's we having like a long term. Crude oil is falling. Interest rate in India are manageable right now. And RBI is supporting foreign inflows. GeoIPO is coming and making India is real. So these are like 5 year stories, not like 5 day stories, you know. And for the today's session, be patient, be selective, and don't get panic and sell your whole good long term holdings. Use red days to accumulate quality stocks, not to exit them. So if you found this news good, just like, share, and share the video to your friends who are investing, and they'll get the quick updates here. So yeah, we'll come up with the open interest and stocks of the day. Just be with us. We'll get back to you guys with the open interest and stocks of the day.
So hi guys, now we'll be looking at Nifty indexes and its option chain analysis. Let's see how each index is performing right now based on option chain. Yeah. So I think the chart is visible in the live. So we can see the chart which I have put is the option chain. So from this we can identify where the resistance is there and where the support is there. So let's start. So I'll also put the technical chart first. Yeah. So that I think the technical chart is visible now. So when we look at the technical levels, we are currently looking at the 15 minutes time frame. So when we look at the technical levels, we see a resistance here, and we can also see a supply zone which formed yesterday. So it had broken a structure and it has given a supply zone here. So when we switch to 5 minutes time frame, the price is currently trading in the supply zone. So since it's a supply zone, we need a confirmation here. We can't blindly go for short positions or look for long positions as well. Since it's trading in a supply zone, we need to wait for a candlestick pattern here. So we need to wait for a bearish engulfing if we are looking for a short positions or a rejection here in a 5 minutes time frame. Then we can execute the trade in 1 minute. So this is the technical levels of the chart for today. So if there is a possibility of breaking this level, if price closes above this level, I'll just show you. If price closes above this level and break this super trend, there is a possibility of price going to the next resistance zone, which is around 24,050, and the next resistance zone is around 24,131. So yeah, since the price is currently trading near the this zone, we need to wait for how the price reacts here. So before that, we'll just look into the option chain 50. So I'll just refresh. So the bulls are engineering a beautiful steady recovery following yesterday's sharp post expiry unwind. So the Nifty 50 is trading up by 0.39%, which is currently around 23,990. So after a flat to negative open at 23,795, it tested a minor session low of 23,789, where buyers entered the fray near the critical 23,800 psychological mark to march the index up to a intraday high of 23,920. So, so when we look at the top left, so when we look at the top left corner, we can see the India VIX. We can see a India VIX. It has cooled off down to 13.72, which is down by minus 0.22. And buyers entered the fray near the, which indicating an evaporation of morning panic. So meanwhile, the intraday PCR for the current near-term contracts is flashing a highly bullish of 2.064, showing a massive aggressive put writing underneath the market to absorb supply. So let's break down when the large macro desks are placing their bets. So we'll just look at the strike prices. We'll straightly look through 23,900 strike price, right? This is where the current spot price is. No, no. So the green bar shows clearly intraday accumulation. We can see the intraday accumulation over here with the fresh diagonal green stripes, meaning put writers are proactively moving up the defense to convert 23,900 into an active intraday flow. So if you look at the change here, the put OI has increased by 7.97 lakhs and calls OI have increased by 89.64k. The total put OI is at 44.57 lakhs, whereas calls OI is at 5.31 lakhs. So we can see a clear difference. There is a massive difference between put OI and a call OI. So we can see this as a massive support level, which is currently is the trading at. Once we close above this level, we can see that the buyers have aggressive buyers have entered into the market. So wait for this level when we look at the technical chart. Just align those open interest into this technical chart. So we see that there is a strong support forming in 23,900. So we also see 23,915 we have a resistance level, and 23,900 the support level is strong here. So we see there was a break here. So there is a strong support level forming in this area. So wait for this. You can if this level breaks, if 23,009, if the price closes above the supply zone, then you might look for the retest around any of these areas here. So we'll just switch to the open interest chart again. So this is there is a barely any red call writing visible at 23,900. Just a minute. Yeah. So there's barely any red call writing visible at 23 because we can see there is a slight increase, which is around 89.64k when compared to put. There's a massive difference here. So however, don't get too complacent just yet because the index is trading at 23,905 or 23,921. So right on the edge of this boundary line. So we'll just look to the next level. So let's step one step higher on the chart to 24,000 strike. So this is where the things get fascinating. So first notice that the dashboard has marked the max pain preciously at 24,000. So if you look at the bar graph, 24,000 shows a very prominent green tower of TOI, accompanied by a modest red bar of call writing. So this indicates that option writers are overwhelmingly expecting the index to gravitate back towards the 24,000 magnet as the session progress. So we'll just mark this level in the chart. So if we see where the 24,000 level is, that is yeah. So we can see a major demand zone which is broken here in a 5 minutes time frame, and also a supply zone form. So we can see our a technical chart clustering with those levels. So 24,000 is a key level to watch out as just I'll switch it to that. So this indicates that option writers are overwhelmingly expecting the index to gravitate back towards this level. So the smart money is treating 24,000 as a zone that is highly likely to be conquered and retested as a structural support later in this week. So we'll just move to we'll spot the out of money fortress, which is 23,500. I'll just which is 23,500 and 24,200. So the ultimate floor, look all the way to the left, where 23,500 features a massive towering green pillar with a clear diagonal increased strikes. So there's a put OI change of 19, it has increased by 19.18 lakhs, and call OI change has increased by minus 43.36k. It has decreased. So we can see a hollow block here. It has increased by for minus 43.36k. So the large institutions have completely written off any deeper correction below this level for the current cycle. So look at the right, 24,200. This strike shows an absolute mountain of both put and call open interest stacked together. So it is currently the largest aggregate block on the chart. If you see this 24,200, so it is currently the largest aggregate block of the chart. We have it has increased by 73.25. Put has been increased by 73.25, and call OI has been increased by 83.37. Even though the call OI is slightly increased, more than put, but when it's totally calculated, put OI leads. It is at 1.24 CR, and call OI is at 1.9 crore. So where Puto still keeps holds the lead. So this tells us that the option market makers are setting 24,200 as a definite upper target boundaries for broader swing trades. So we'll just mark this level in the for swing trade perspective. So as we see 23,500. So this level and 24,200 would be this level, right? So market has broken the supply level, so there is a high chances of market to go up another 65 points here. So keep an eye on this. Wait for the retest or a proper candlestick pattern. So manage your risk. Don't blindly enter. So we'll just move to the next executive thing. So we'll just analyze what are the scenarios for today. So if we look at this 24,000 strike, we can say that with the index hovering at 23,947 and the intraday PCR heavily favoring put writers at 1 point, which is around 2.064. So we can know any minor continuation that clears the morning high of 23,910 will trigger a steady drift into 23,980 and 24,000 max pain target zone. So currently the price, as as mentioned, price has closed above the supply zone. So price, there's high chances of price to move towards this 24,000 24,000 price, because we had seen that there was a huge price build up here, all the way build up. So it acts as a magnet where the price goes towards 24,000. So keep eye on that level. So, and second scenario would be if cross index volatility from the banking index creates an erratic midday dip. Look at the 23,800 to 23,850 corridor, 23,800 to 23,850. So, if in case in midday there was a midday news that creates a dip in the market, just have an eye on this level 23,800 to 23,850. So we see that in a technical chart there is a demand zone being created here, right? So this acts as a strong demand zone here. So the solid green column on the chart shows deep structural thing. If you look at the 800 and 900, we have a solid, strong green bar. So treat any cooling off period between 23 8:30 as high probability by the dip accumulation window, keeping a tight or a stop loss below 23 870. So the structural option data is leaning distinctly constructive this morning. Respect the 23 800 and play the momentum towards 24,000 max pain target, and keep your risk precisely managed. So this is about index option chain analysis on Nifty. So we'll be returning for Bank Nifty as well. So let me know if you have any questions on, or let me know your plans on Nifty today. Are you looking for long positions? Are you looking for short positions? Let me know in the comments. So we'll be returning back with Bank Nifty option chain analysis, the span of 5 minutes. So meanwhile, let me know your plans in the comments. So meanwhile, we had given an update on ABB stock. So we had told that ABB stock is in downtrend and look for short setups. So we had given the update on. So we gave an update at around 10 So the stock has fallen around 50 points after our update. So let me know people who have noted this and concentrated on the stock. So yeah, we'll just move to Bank Nifty. So yeah, on AVB stock, beware of short positions from now on. So the market is in kind of reversing. All the indexes are reversing. So beware of the short positions from now on. So we are looking at the Bank Nifty chart right now. So let's just look at the technicals first. So switch it to 15 minutes time frame. So we can see a supply zone over here, and price is currently price has retested a pivot level or support level. It broke and it retested a support level, and it's moving towards the next resistance level here. So we have multiple clusters here. We see a trend line, which was a support trend line where it broke and it is again moving towards that trend line. And we also see a supply zone here, and above it we see another supply zone. So this level acts as a strong zone. So keep eye on this area. 1 hour for even more confirmation. So if you see 1 hour, again we have a strong supply zone here. The price has given a structure shift, and it has created a strong supply zone. We see a strong aggressive buying candle. So we need to wait for a retest over these zones and look for a reaction. Then we can have a confirmation with any candlestick patterns or change in state of delivery. Then we might look for a short positions, or if the price consolidates there and breaks above the zone, then we can see that we can confirm that the aggressive buyers are entering into the market. So there is a strong chances of reversal and uptrend movement. So we'll now confirm it with open interest chart. So So on the surface, the bulls are impressive. It is up by 0.84%. Yeah, it is up by 0.83%, where it is currently trading at 57,657, and up by 473.90 points. So let's look at the derivative dashboards. We have a massive divergence under a hood. Uh, while India index has pulled by 13.72, which is down by 0.22, indicating a fading near-term market panic. The intraday put call ratio is flashing a heavily bearish, which is ultra skewed, which is under 0.313. So this heavily bearish signal. So how can the market be up nearly 1% while the intraday PCR is deeply depressed? So let's dive deep and let us look what the option chain is showing. So option sellers are aggressively piling into call options, setting heavy traps over it. So we can see a 58,000 massive overhead. We can see a massive red towering bar, which is increased by 69.12k, whereas put OI has just increased by 600, and call OI is totaling at 10.1 lakhs, whereas put OI is totaling at 2.67 lakhs, where we can see a massive difference. So if the macro max pain is sitting far lower at 57,000, so this means market makers are heavily incentivized to pull this index back down to the earth before the final settlement. Let's trace the institutional battles lines to see who is going to win this war. So we'll just spot 57,500 and 57,700. We can see this. So 57,500. So this is where the immediate tug of war has taken place. You can see a decent green column of Puto attempting to form a floor, but it is completely overshadowed by a much larger red call tower, topped with aggressive diagonal stripes. So even we can see there is a decrease in put OI, which is around 810, and the increase in call OI, which is around 44.79k. So the sellers are actively building a dense camp of fresh call shots here, trying to choke off the bull supply line. So we'll just mark these levels in the chart. So since the price has recently broke this level, we'll just switch it to 5 minutes time frame. Price recently broke this level and it has closed above this level, 57,500, and it has also closed above 57,600 as well. Right? There's no much call or put OI buildups. We'll see 57,500. Okay, we just marked it. So 57,400 is also 500. Yeah, 57,400 has also no put or call OI buildup. Till 57,000, we don't see a volume building up here. So notice the absolute lack of significant green put writers. Writing towers. The bulls are riding on pure cash market momentum right now, but they haven't laid down any structural concrete blocks beneath their feet to support this move. So this makes the current 500 point rally highly speculative and technical hollow from an order flow perspective. So if we look at the 58,000 strike, which we discussed before, so there's a massive red tower representing a colossal wall of call open interest, heavily fortified with fresh diagonal entry stripes at the top. So this big institutional desk have designated 58,000 at their ultimate fortress at any cycle. So we see 58,000. Oh, we have marked the supply zone. So this is a key area for the price to react. So they are aggressively shorting this premium, treating the 58,000 mark as an unbreakable ceiling. So, given how massive the red tower is compared to the tiny green put bar next to it, any attempt by Bank Nifty to blindly charge towards 57,900 or 58,000 will result in severe violent rejections. So, the market makers are holding their ground with immense conviction, betting millions that the index will stay capped beneath this fortress. So if we move to the 57,000 trap door, and it's also considered as a max mean magnet. So yeah, so we have a very tall green put writing tower, but right next to it, there's a massive, towering red call tower topped with heavy diagonal stripes. So when you see fresh institutional call pricing stacking up all the way down at the major psychological strike like 57,000 while the market is trading up 57,695, it reveals a high predatory setup. The market makers aren't just selling out of the money options; they are aggressively shorting in the money calls. So they are no, they are anticipating a steep, fast mean reversions drift that puts the index right back towards the 57,000 gravity, well as expiry approaches. Yeah. So So let's understand, what's the scenario for intraday today. So scenario A would be the bull trap and exhaustion short, which has a high probability. So because the CPR has stuck at the ultra bearish around 0.313, the entire 500 points rally is walking on thin ice. So if Bank Nifty pushes higher into 57,800 and 900 zone, we'll just check with the technical chart if we have any zones clustering to it. So we have a resistance level at 752. So yeah. So if anything happens around 750 to 900, so we'll just switch to. Yeah, so we have a breaker block here. If we look at this level, right? So I'll just remove this, but consider this as a breaker block. We had a zone. Even if we look at the indicator, we can see a supply zone. First, it was a yeah, it broke and it again regained here. So wait for this price to tap and look for a reaction over here. So it will plan phase first into this massive. If it closes above this level, then it will directly move to 58,000, and there will be a high price, huge price reaction. So do not chase calls here. Instead, look for classic bearish exhaustion patterns like a shooting star candle or a double top structure on your 5 minute chart near resistance. So a breakdown will trigger a rapid unwinding of weak long, sending the index cascading downwards. So, and the second scenario would be the structural mean reversion. If the index prints a decisive 15 minutes candle close below 57,500, it will officially trigger the trap door with zero structural put support visible between 57,500 to 57,000. The index will, experience a fast algorithmic slide down towards the 57,200 to 57,000, which we saw it has a major support level over here. 57,000. We see a support line as well. So, allowing the massive call writers to harvest maximum premium. So, this data strongly wants that this morning rally is a distribution phase driven by the institutional call sellers. Treat upside moves as a premium selling opportunity. Protect your capital strictly, and let's watch how the order block prints. So, this is purely based on for your educational purpose. Manage your risk. Look for proper zones to enter. Don't enter blindly. With proper risk management, uh, you can hit your targets. So this is about Bank Nifty index and its option chain analysis. So just let me know if you have any doubts on this. Let me know in the comments what's your plan for today's Bank Nifty. Are you looking for short positions? Are you looking for long positions? What have you analyzed and what's your plan? Let me know in the comment section and we'll try to understand your plans as well. So we'll be back with Sensex and its option analysis within 5 minutes. So meanwhile, put your doubts in the comment section. We'll just try to understand your view on Bank Nifty. So yeah, we'll now look into Sensex index and its option chain. So I'll just change the chart for.
Definitely.
So if we are looking Sensex chart, so yeah, so we saw that there was a demand zone which created yesterday in 15 minutes chart as well. So we considered this zone as a very strong zone, but the price has closed above this zone, showing a strong momentum. And we also see a gap between candles, which indicate aggressive buyers entered into the market. So as per technicals, there is a strong view of price retesting these zones and bouncing back again, because there was a strong buyers they have entered and closed above this level. So just we'll confirm it with 1 hour as well. Yeah. So 1 hour, the structure is bearish, but we don't have a supply that yeah. This was a major supplies level, and the price is again wait this 1 hour candle to close above this so that we can expect the price to move to the next supply level. So when it comes to technicals, the price is favoring long positions from here on. We need to wait for a retest or a pullback towards this level, and we need to wait for candlestick patterns or any bullish signs that the price would show. So wait for the price to pull, retest the zone, and then we can plan the positions. But if the price doesn't retest and if it goes to this level, then you need to wait for the opposite. You need to wait for bearish candlestick patterns. So we'll just look at the Sensex option chain. So when we look at the Sensex option chain, we can see that there is a massive support at 76,000. There's a massive support at 76,500. We see from 76,000 to 76,700. We see a strong, call writers dominating it. So this forms a strong supports in each level. So currently the price is trading at 76,690. The price is heading towards the 76,700, which is considered as a another next strong support zone. So the price has reacted to it. The price has reacted to the 76,700 level, right? The price has reacted to the 76,700. It is currently consolidating near those level. So wait, let's wait for the let's look at the price how it reacts. Whether the price comes and retests this level or was this an absorption here. So we need to wait and watch for it. So when it comes to resistance, the immediate resistance level is at 76,800. Right, the price has tapped that level as well. No, the price hasn't tapped that level yet. So the price has to the immediate resistance level is at 76,800, and and at 77,000 we have high resistance, strong resistance. So we have a pivot level supporting to it as well, and a supply zone, like which was a demand zone before, and it broke and it has turned into a supply zone here. So we had also marked the strong supply level here in 15 minutes time frame. So this acts as a strong level. So if the price reaches here, then wait for a strong reaction. So if we look at the option chain analysis, we see Sensex showing a strong bullish PCR, which is around 1.22, and India VIX has cooled off by point minus 0.24. So if you look at the 77,000, there's a massive difference in the total, where put SOI is at 76 lakhs and call OI is at 27.21 lakhs. So the change is call OI has increased by 7.63 lakhs and put OI has increased by 2.89 lakhs. So when it comes to the support level, the immediate support level is at 76,500, where the price is currently approaching to it. It has reacted to this level, and 76,500 we have also given the zone here that it broke the recent supply zone, and it is currently trading towards the next zone. So there's high possibilities of price reaching to this zone and giving a strong reaction as open interest also complements it. We see a 76,500 as a strong support. Put OI has increased by 26.65 lakhs and call OI has increased by 1.52 lakhs. And the difference as 20 lakhs of difference is shown between put OI and call OI, which is very massive. So this acts as a strong support level in the even in the technical chart as well. So there will be two scenarios for this. So wait for the price to retest this level and look for long positions. And if it doesn't reach this level and if the price directly move towards this level, then and in the second half of the market, look for the bearish candlestick patterns, and then you can look for short positions. So this would be two scenarios in Sensex chart. So manage your risk properly. Wait for the exact candlestick patterns. Without confirmation, don't enter, or else you'll be trapped. So always enter with confirmation. Look for the zones. Let the price enter the zone and give you a confirmation pattern. Whether it may be a candlestick or if you're using EMA, let it close above the EMA. So like this, wait for the confirmation patterns, then enter it. So this would be the index analysis and option chain analysis for all the three index, Nifty, Sensex, and Bank Nifty. So let's see how it performs in the second half of the market. We'll just put the chart and we'll check how the market has moved, whether the market has moved according to the analysis or not. So let me know in the comment section uh, if you have any doubts related to this option chain analysis, and let me know the plans you have for Bank Nifty, Sensex, and Nifty. Let me know your favorite index as well. Which index you always trade, Nifty, Sensex, or Bank Nifty. So put it in the comments. So we'll be back with the option open interest analysis for stocks, like what and all stocks to look for today based on increase in open interest, and also we'll be discussing about the heat maps as well. So stay tuned. We'll be back in another 15 minutes. So until then, let me know your favorite stocks to analyze. If you have any favorite stock, put it in the comment section. We'll analyze it. We'll share your plans as well. We'll look at the chart and understand whether your analysis aligns with our analysis.